Good morning. Welcome to Ideal Homes again here in sunny Algarve. Today I'm sitting with a colleague of mine and somebody that I work very closely with, Nicholas from UCI. Nicholas, welcome.
Good morning. Thank you for the opportunity to be here, and good morning to all our viewers as well.
Absolute pleasure having you. Nicholas is, like I mentioned, is our mortgage advisor at UCI, one of the banks that we work very closely with. We've done a couple of years financing with you and Ideal Homes. We've created a wonderful partnership.
Of course.
And wonderful understanding. We've helped each other in processes. Clients that were almost impossible to obtain, and Nicholas has come to the party and got them over the line. Nicholas, first question, and this is what everybody else is asking: has the Ukraine effect hampered has it had a negative effect on interest rates?
Well, first of all, once again, good morning. My pleasure to be here. Answering your question, and as my personal opinion, yes. Because what has happened here, and it happens with all crises, in this case it's a war.
Yeah.
And we're having, as everyone knows, a war back in Ukraine. The impact that this has, my personally, it's obvious, because what happens, prices in general of petrol, money, currency actually goes up. The inflation rate due to the war is going up. At the moment, we have the inflation rate here around about 8% at the moment.
Yep.
We can see day by day petrol prices.
So the cost of living is increasing.
Exactly. So if the cost of living is increasing, the interest rates, of course, will rise as well. Everything accompanies. This is economic.
Exactly. Yep.
So what happens here? Due to the war, of course, there's a provision of the interest rates going up, of the base rates going up. And when we speak about base rates, all mortgages here in Portugal applied with the base rate, with Euribor 6 months, 12 months or 3 months,
Yep.
plus the bank's margin, of course, which is spread, that makes up the interest rate. Of course, there is a provision that it goes up.
So we take the Euribor rate plus the bank spread, and that's what we supply our clients.
Exactly, that is the interest rate. The interest rate is made up by the Euribor, which is the base rate, plus the bank's margin, and that's what gives, of course, the interest rate.
A couple of months ago, before Ukraine,
Yes.
that Euribor rate was a negative rate. I think it was negative 0.5.
Yes.
At the moment, about 3 weeks ago, it became a positive rate.
Yes.
It's now sitting at about 0.4, 0.5.
Correct.
Positive,
that is correct.
Plus the bank's spread.
Spread.
Is there any way that the banks could alleviate the interest rates here in Portugal? Perhaps cut their spread?
Well, it's like a simple example. Let's imagine that I have a supermarket and I'm going to supply myself. For example, I go to macro grossist, and let's imagine that I bought my liter of oil, a bottle of oil, last month, for example, for €1.
Yeah.
And I sold it for €2. I have to get my profit, of course, on investment.
Yeah.
And if I'm today buying the same bottle of oil for €2,
yeah, your margin obviously can't be a lot higher.
exactly,
but you still have to make
we still have to make the profit. It's the same thing for the banks. In my personal opinion, once again, if the base rate is going up, banks are financing themselves more and more expensively.
Yeah.
So in order to get the return on equity, return on investment, there's not enough, I don't see any margin for the bank to lower the spreads. No.
Anymore. I mean, you can't. I've seen a couple of banks have cut their spreads but not huge amounts.
Yes.
0.2%, maybe 0.1%. That has had helped with interest rates, but there's not a lot more that the banks can do.
No, of course, not more, no, but I think this is very important, and mainly if you're a non-resident client, whilst looking for a mortgage and finance here in Portugal, don't look just at the interest rate, okay? The interest rate is important, but there are two main things that are very important normally clients don't look at. First of all is the TAG rate, okay? The TAG rate is the final cost of the mortgage. Okay, so for example, if I have a lower interest rate, but then if the bank obliged me to subscribe life insurance, housing insurance, contents insurance, health insurance,
those are all costs.
credit cards, payments into accounts,
That's
this
all costs.
increases the cost of the mortgage, and this can make a difference. For example, on a 100,000 euro mortgage over 20 years,
Yeah.
you're paying probably 10 or 15,000 more on top than if you go with a bank that does not do any cross-selling of this kind.
But that's all explained in the summary, that when a client approaches us,
Of course.
and he says, listen, I'm looking for a mortgage, I don't know what I can afford, we give them options, all right?
Exactly.
In that summary that we supply the clients, everything is broken down there. I know UCI do an awesome job, and the breakdown is intense. Everything is there for the clients, and if they have any questions moving forward, if you don't understand something, Nicholas, myself, we're all here to help you.
Of course.
If you want to reach out to Nicholas, come through us. We can put you in touch with Nicholas. Not a problem. Quick one, I wanted to ask you. UCI, I know you guys are a group of banks. Your biggest shareholders would be Santander.
Okay, UCI is a financial institution specialized in mortgages, okay? We only do mortgages. Okay, we are owning 50% capital by Santander, Central Hispano, and 50% capital by BNP Paribas. Whereas two of the largest banking groups in the world own UCI. And like I said, we only do mortgages.
Yeah. So
straightforward.
Another thing, and a lot of the times can become a deal breaker, is the life insurance. UCI are one of the very few banks that will give you 70% life insurance without life insurance. 70% mortgage, sorry,
yes,
without life insurance.
Yeah, it is possible, of course. Even so, and going back to the interest rates, I'll give you an example of a client that I had 2 months ago. The client was offered a lower rate from another bank in 0.2%, lower than what UCI was able to offer the client. But then he decided to go with UCI. Why? The client was in his 50s, and we know more or less than the client buying a property in Portugal with 45 years age or more, taking out life insurance, probably will be paying more or the same with the life insurance as he will on monthly installment of the mortgage. Yeah. This is why the client wanted to go with UCI in despite the 0.2% lower rate than he had with the other bank. And then the cross-selling of the bank products that the other bank would oblige the client to subscribe. Yeah. The client had a restaurant, just for you to have an idea, and this is for real what I'm going to say. The bank, to lower him the rate 0.2%, the client had a restaurant, and the bank obliged him to subscribe security camera surveillance for the restaurant. That will cost him 1,700 euros per year. This includes to lower the rate on the mortgage. So yeah, nothing like that.
We find that as well with clients taking out mortgages. What we like to do and what we offer our clients is a bank will give you 80%. Great. You can get 80%, you only have to put down 20%. But with that 80%, you need to take life insurance. And you look at like you mentioned, the client's age, maybe they've got health issues or something like that, then your monthly your life insurance installment is a lot more, and a lot of the times it can become a deal breaker. So if you can get a 70% mortgage with UCI without life insurance, it might make sense for the client to put down the extra 10%.
Exactly.
And sit back and not worry about life insurance. Another thing is fixed rates and variable rates. I know UCI have got this wonderful option where you can go on a fixed rate for 5 years or 10 years and then move over to a variable rate. Again, one of the very few banks that offer that. Please just explain that to me a little bit more, the fixed rate and variable rates.
Okay, now regarding first of all the variable rates, most banks work with Euribor 12 months as a base rate. Yes. We work with Euribor 6 months. This is a plus for us and it's a plus for our clients. Why? Because the base rate of Euribor 6 months is first of all lower than the Euribor 12 months. Yep. Let's imagine that a bank will supply you a variable rate with Euribor 12 months plus a margin lower in 0.2 or 0.3 than we would apply with Euribor 6 months. Our interest rate will still be lower than the other side.
The 12 months one.
In a scenario of going up, as we have now, of course, when Euribor 12 months rises, the impact is much more higher because the percentage of variation that it goes up is much more high. It has a lot more impact in the client's mortgage payments than Euribor 6 months. Okay. And the same thing when it goes down. Euribor 6 months, when it goes down, the monthly payments of the clients go down quicker than with Euribor 12 months. Exactly. The fixed rate options, yes. We do have the 5-year fixed rate option, which I do advise as well, of course. But regarding, and I just want to speak here regarding the non-resident market here. Okay, this is important. If I'm buying a property here, normally it's for investment.
Yes.
I keep the property 4, 5, 6 years, then sell it and make a profit of 10%, 15%, 20% from what I paid for it.
Yeah.
Now, if I'm only looking to keep the property in average 5 years, 7 years, I think it would be a bit hasty for you to lock yourself in with a fixed rate for the full term of the mortgage with a rate up here,
Yeah.
or even 10 years. My personal, if you want to lock it for 5 years. After 5 years, if you still want to keep the mortgage, renegotiate. If you want to go back to fixed, you can. Otherwise, it goes to variable. Otherwise, what I would advise at the moment, even so, and this is my personal opinion, it may go against a lot of economical advice, etc., to lock in the rate, etc. For investment purposes, take the variable rate. If you want to make any early repayment penalty, you only pay 0.5% penalty charge.
Yeah.
If you
compared to if you are on a fixed rate,
2%, 2% penalty, and at the end of the day, it's money.
Yeah,
it's money you can
exactly.
save.
And with the situation that we find ourselves, every cent counts.
Exactly. So my advice at the moment would be looking for a mortgage in Portugal. Choose a bank that works at the moment with Euribor 6 months,
Yep.
okay? If you have the possibility, work with a bank that will not oblige you to subscribe any bank products, okay? And you keep your early repayment penalties low, 0.5%. If you wish to take a fixed rate, a bit more security, take a 5-year fixed rate. If the 5 years are up, it reverts automatically to variable. If you want to negotiate to keep another 5 years fixed, for example,
You can
we're
do
able
that.
to. So
You can do that. What do you, I know again, let's be a little bit personal. What do you think is going to happen with the interest rates in the next year in Portugal?
well, we were speaking before, and we were discussing the variation of the Euribor rates, the base rate since 2000
Yeah.
until today's.
Yeah.
And we see that in normal, we have this, well, 5 years, 7 years trend cycles,
Yeah.
in which the rate goes up during 2, 3, 4, 5 years, then it comes down, then it goes up 3, 4, 5 years, then it goes down. So at the moment, we're at the beginning. As you mentioned, that 2 months ago, it was negative 0.5,
Yeah.
and now it's positive.
So we're going in the wrong direction at the moment.
We're going in the wrong direction, but like I said, these are economical cycles. Of course, I cannot predict what's going to happen in 1 year, 2 years' time. I cannot, but we can analyze all the data, all the information we have from the graphics. You can go to Reuters' website, for example, or simply tap in on the internet on Google search www.euribor.eu.
Yeah.
And you can see the variation of the base rates since 2000 until today's.
Yeah.
So if we just look at that data, what we can see and predict, for example, for the following year, 2 years, 3 years, will be on the up, yes.
In English. And then obviously we'll hit that curve and come down again. And then in 5 years' time, we're looking at the same
thing. These are economical cycles. This is how it works. I think, honestly, the sooner the war ends in Russia and Ukraine, the sooner the base rates will start going down again. This is my personal opinion.
Yeah, I think so as well. I think once that conflict is over, I think we probably won't see the negative 0.5s again, but it will start moving in the right direction. As
well as petrol prices. For me to come in from now, it's amazing because about 2 months ago, I used to fill my car with 80 euros in petrol. Now it cost me 120 euros.
So 80 euros is just to go down the corner.
Exactly.
Nicholas, thank you so much for joining me.
It was my pleasure. Fantastic always to be here. Nice to be here.
Moving forward, if you need to get hold of Nicholas, get hold of us here at Ideal Homes. We'll put you in touch with Nicholas. Nicholas is a wonderful person to talk to. As you can see, his English is impeccable. Very down-to-earth guy. Have a chat with him. Come through us. We can help you out. Until then, take it easy.